What's up, everybody? Welcome to today's episode of the Daily Dose. Today is Tuesday, September 13th. I have a little bit more to talk about today. Today was a huge day, so I want to get right into it. But if you enjoy this type of content, we release a short video like this every single day that the stock market is open, and we release a longer, more in-depth video that has more analysis over the weekend. So subscribe here on YouTube. Be sure to follow us wherever you listen to podcasts. But let's get into it because today was a massive day. Now, if you remember yesterday, I mentioned that we were really likely to see a huge sell-off following the CPI data that was going to come out. I didn't think that the market would be down over 4%, but I did expect it to swing heavily, most likely to the downside. So the markets did not react well to the information we got today. A lot of banks were expecting inflation to decrease, and it actually was up 0.1% month over month. The markets are not reacting well to that because the Fed is going to have to tighten for longer and maybe even tighter than they were anticipating before. The market is now pricing in a 23% chance of a 100 basis point hike for the next rate hike cycle, which is not good for equities. So the S&P 500 was down 4.3%, the Dow was down 4%, and the NASDAQ was down over 5% in one day. So the technology stocks are obviously more affected by higher interest rates, so they fell the most. They're also usually just more volatile stocks, will have higher betas than the S&P 500, which is just a beta of 1, and then the Dow, which is typically less than a beta of 1. So we're most likely at least going to see another 75% basis point hike. I don't think we're going to see a 50-point basis point hike. And now they're even talking about a 100 basis point hike, which no one was thinking before. So that's why the markets were down so heavy today. Also, we had just been rallying so heavily in the days leading up to this announcement. Again, we mentioned yesterday that we were right on this resistance. We rallied heavily right into a resistance before this announcement that could really trigger the markets. And we got bad data. Inflation is sticky. It's high. And, I mean, the market just got crushed. We moved into this zone here. The next level of support would be around 38.95. After that, we're looking at 3,700. And then after that, the June lows. So we definitely could break through and make a low from the June lows. If we do, say worst case scenario, we break through these June lows and we come back down, I wouldn't expect it to get below this channel line. So maybe we hit somewhere like 3250. That's something definitely that we could see. I don't think we go below the channel line though. But we're definitely looking bearish once again. This turned out to be a bear market rally for sure. I think the news today just really is setting in the reality of the situation in the United States, that it's not great. We also mentioned yesterday that Bitcoin has been trading really correlated with the NASDAQ. And if the NASDAQ goes down hard, this is probably going to go down harder. Well, the NASDAQ was down a little over 5% today, and Bitcoin's down almost 10%. So really just everything that I said yesterday kind of happened today. The S&P 500 bounced off a huge resistance, got slaughtered. The NASDAQ was down more than the S&P 500 at 5%, and Bitcoin followed suit, down almost 10%. But one thing I want to take a look at here is the VIX, and this, if you don't know what the VIX is, this is the volatility index. So this basically just measures the risk, the fear, the volatility in the market. And we talked about it this weekend. We talked about usually we don't see a market bottom until we get somewhere at least in the 40 to 45 range, if not higher. And we talked about how that would be a big level, that if we saw some capitulation in the market, we should see the VIX spike. And we saw the VIX up 14% today. Now, it's back where it was after the Fed meeting in Jackson Hole. It's still not where it's at from the June lows. If you look at our last really big bear market, it got up into the 80s, the mid 80s, when the COVID crisis happened, when that market bottomed. So if we're going to see real capitulation, which is usually what you see at the end of a bear market, we need to get up higher in the VIX. So that was up higher today. And if you don't know what I'm talking about, this is what I'm referring to. So this is the VIX. It was a comparison with 2008, and really with any bear market, you'll see this capitulation. Maybe not this high. Again, this went into the 80s, just like the COVID crisis. So we could see something like that, but we at least need to see something at least in the 40s or 50s to say that we've really hit a bottom and we've capitulated lower. Another thing that I want to mention is we talked about how September is usually not a great month, and usually that happens near the middle of September. So we talked about this weekend how we had a little bit of a rally, and that continued through the beginning of September and through yesterday, the 12th. And now we're kind of seeing the markets decline, and that was in line with what we said about September. And additionally, that's what we see in midterm election years, especially even more exaggerated than a normal year, that September, October will be a really steep sell-off. So that in correlation with everything else we are seeing in the markets, obviously the S&P 500 was sitting on this resistance, and we knew that this data coming out this morning could definitely swing the markets, that we could have a pretty violent sell-off, and that's what happened today. So we could see a little bit of coiling here until we move lower, or maybe we just keep aggressively selling off. That's what happened after the Jackson Hole meeting. We kind of broke through one resistance zone and then went to the next before we started coiling. So if that were to stay consistent here, we'd break through this and then maybe coil near the June lows, and then the market would make a decision of whether we would bounce, and that would be kind of like a double bottom, or if we would coil and then head lower. Additionally, what we talked about this weekend was the different cases for the bull and bear side. And for the bull side, we said, hey, either way, we're most likely going to come back to these June lows, and then maybe there's some coiling, and then we move higher. And maybe for the bear side, we had this bear market rally. We come back to the lows and we coil. We come back to the lows and we coil, and then we capitulate lower. So either way, that's kind of what I'm expecting. The market looks like it kind of wants to break through this and then coil out the lows. So it looks like we're heading to that next phase. But obviously, today was a big day. We thought it would be. But I think I'm going to stop it there. I do thank you for joining me. I apologize for going a little bit longer today. Today was just a big day in the markets. Obviously, that news was really heavy. So make sure to stay tuned for the rest of the week. We'll be sure to push one of these out every day. And until then, thank you for listening.